This conference will now be recorded.
So once again, our focus now is on cost volume profit relationships as we go through the project and complete our product. And we're going to focus on break even point. That is, how many units do we have to make so that we will break even? And then we may do $1 million after that. But right now, let's just say we're going to focus on the break even point. And we said what we have to do when we're running a company is we have to determine whether or not we need to borrow money, and we got to do that ahead of time. We need to present a schedule like this to the bank, showing what we're going to borrow, when we're going to pay back, in running the company. And that's the main reason banks are in business. Now, when we have a manufacturing company, it's a little more involved. And so what we want to concentrate on today, once again, is the sales budget. And how do we get to the sales budget? Now, in your handout, we have all of these budgets, and we may get back to some of those today, but we're going to work through the sales budget again. And the most important budget, of course, is sales and the receipts that you're going to get. And as part of what we're doing, we make these journal entries. We first invest in a company, and these journal entries are going to help us to prepare financial statements eventually. So we'll get to the financial statements eventually. But every time we have a schedule, it's got this information. What are we doing with that schedule? Determine the total units that are going to be sold, calculating the sales by quarter, putting in our bad debt, and then looking at how much we're collecting and making these journal entries. So we want to practice on this again today. We want to practice on this again today. See where we are in terms of how do we get there. So this is our problem, correct? This is the problem we worked on last time for the first time, correct? Where
Correct.
we had all these assumptions in here about quarterly sales and everything about your product. And you can pretty much, you have utilize these sales quarterly percents and things like that, and collections and things like that. You can go ahead and utilize that, but you'll need the same assumption for your product. And so it'll look like this. So that looks like a lot of information, but it's not that much. And so the first thing we want to do, so the first part of our process is to go through, see where we are. This is the first thing we're going to do, is prepare the master budget quantity solutions. And so you're going to come here with your product, when you're working a problem. We on the break-even year, okay? So what does it tell us we need? We need the selling price. On a unit basis, we need ink, paper, labor, and bad debt and selling expenses. Those are the variable expenses. And these are always going to be the variable expenses, in the problems that we're working with. Ink, paper, labor, bad debt, and selling expense. So we simply are going to come through and get those expenses to come up with our total variable costs. We're going to subtract that from the selling price to get our contribution margin. All of this is on a unit basis. The fixed costs are on a total basis. And the fixed costs are always manufacturing overhead, administrative expense, interest expense. Those are the fixed costs. And with that information, we determine our break-even sales quantity. So what I told you to do is that if you had information like this, you just insert you a break-even column. Well, let's just say a CVP column. Where you, where did it go? Where you're going to pull out items that go here. You're going to pull out items that go here. First item here is sales. So we need to come in here and get a selling price. It tells us sales of 500. So that's the first item we calculate, and we put that right here. Are there any questions on how to do that? Come in here and put the $500 selling price. Any question? You got a selling price. You look through here, your information. All you want is the selling price. That's going to go here. All right, now we need, next thing on here is ink. So we go down to the ink. It says what? 5 ink cartridges at 10. So what we're going to have over here? 50. So ink is the next thing we put in here. What's next? Paper. And of course, you got these items for your product. So how much paper are we using? We have 7 reams that cost $7. So how much is the paper? $49. We're going to pull the paper out. Next is labor. So we go down here. It's 20 books per hour. They make that many. The rate is $20 an hour. So 1 becomes the labor cost. We next need bad debts. That's the next thing in here. So we go up here. If we're collecting 40 and 50, our bad debts is 10% of the selling price. If we're only collecting 80%, it'll be 20%. So we look at these numbers and then you come up with your bad debt amount. So if our collections are 90%, it's not in here, but bad debts have to be 10%. We simply take 10% of the selling price and we get a bad debt of 50. What's the final thing in here? What is the final thing?
Selling expense.
All right, so what do we find on selling expense? It equals what?
30% sales.
That's correct. So 30%, so that's 30% of the selling price. How much is that going to be?
$150.
$150. So we can add all of these up. And our total variable cost is going to be how much? That going to be $100? $300, excuse me. So what's your contribution margin going to be?
Is it 200? Wait, do you subtract it, right?
Yep, just subtract them. So we calculate the selling price, then we calculate all the variable costs. Then we subtract those and we get 200. Notice all of this is on a unit basis. Now, when we get these fixed costs, and they're always going to be the same, overhead, administrative expense, and interest expense. So what's our total fixed cost going to be? We go down here, okay, we need the manufacturing overhead. We pay an overhead of $25,000 a quarter. So what's our overhead going to be?
100,000.
100,000. So we just put the overhead here, 100,000. Next, we need the, I'll put it here, 100,000. We need the administrative expense. We're working with the totals. So if we pay this quarterly, how much is the administrative expense going to be?
200,000.
So we're going to put administrative expense in here, 200,000. And the final thing we're going to do is put in here what? The interest expense. So how much is the interest expense?
100,000.
Because we just add them up there in that quarterly. So our interest expense total is 100,000. So what is our total fixed cost?
400,000.
So what's our sales quantity going to be? To break even, how many do we have to sell?
Two 200. I mean 2,000.
How'd you get 2,000?
400,000 divided by 200.
So we simply took the 400,000 total fixed cost, and we divided that by what? The CM, the contribution margin. Are there any questions?
No, sir.
So Kyle is answering for
No, sir.
everyone. Good. So we want everybody to get some points today since y'all here and these other people didn't show up.
Did you get any
I have a
points?
question.
Yes.
So is this going to be our quiz, or is our quiz coming from our project?
Combination of both.
Okay.
So we're going to do a break-even quiz now. So we're going to do a break-even quiz.
Professor, I'm commuting right now. I'm trying my hardest to get to my computer, but can I have? I'll probably get there in about like 10 minutes, 10, 15 minutes.
You just have to talk and help them out. Because
Okay, as long as I get some credit, that's all I'm trying to figure out.
Y'all gonna fill it out, and either the class pass or the class fail.
All right.
So we're gonna the break-even quiz is here for everybody who's here. How many people here? 9 people. So all y'all got to do as a team of 9 is to figure out this break-even quantity. Let me copy these assumptions, I guess. Better undo that. Okay, so I'm putting the assumptions down here, but I'm going to change them. So we're going to make our selling price $100. Our bad debts will be 20%. And we'll be collecting 40 and 40. Let's assume it takes 1 ink cartridge. Takes 1 ink cartridge. And it takes 2 reams of paper. And we'll make the reams of paper $10 each. Our manufacturing overhead, let's assume that it is about $5,000 a quarter. Our administrative expenses are $10,000 a quarter. And our interest expense is $2,000 a quarter. Let's make the interest expense $2,500 a quarter. Okay, so in our revised problem, the selling price is $100 a quarter. Our bad debts are 20%. It takes 1 ink cartridge, 2 reams of paper, and let's assume that we can make 10 books an hour. So we're making 10 books per hour. Manufacturing overhead, $5 a quarter. Administrative expenses, $10 a quarter. Interest, $2,500 a quarter. Does everybody have the relevant information? Are you missing any information? Okay, for 10 points today, calculate the correct break-even quantity. Does everybody have the information?
Wait, I don't have this master budget.
In
I
course,
don't.
Scott?
It won't. I have been having issues with mine. I had the cash budget, but I didn't get the master one.
It is the same thing. Sometimes they use interchangeably.
Oh, okay.
But right now, you're concentrating on coming up. The first thing you got to do with your project, with any quiz, is come up with the amount that you need to make. So does everybody have all the facts?
Can you let me see. Let me just take a screenshot. Okay. Okay.
You got everything now?
Yes.
Okay, so how much time you all need? 8 minutes? You need more time than that. Will you all discuss it? I'll be back in about 8 or 10 minutes, and you'll get me your final answer.
Okay. So we have selling price is on 100. Okay, I'm looking at something different. So mine,
Are you looking at, did you like actually pull up the actual document like on your laptop?
yeah, but I only have the cash one, so it doesn't have all of this extra stuff in here.
Yeah, because he just added all of that in.
Oh, okay.
We're just going
So,
off like his screen, but he didn't scroll up. But I got, because we're supposed to add, are we supposed to add quarterly for the selling price too? Like 100 plus 100 plus 100 plus 100? If so, I got
yeah,
4. Okay. For
for
400.
40,000 on administration. Okay, hold on, because I had to take screenshots because I'm on my phone, but I'm on my computer too. So, I get this. So the manufacturing overhead is 25,000. I mean 20.
Yeah.
Okay. The quantity. Do we not have the quantity on here? Or we
Wait, the
have to
quantity.
find the quantity.
We have to find it.
Oh, that's what we're doing, the break-even quantity. Oh, okay, I see. Because we're supposed to be doing like those shortcut ones instead of, okay.
Yeah, you gotta like refill out basically.
Got it. Okay. I forgot.
Interest expense is 10,000.
Yeah, that's what I got. And then the administrative is 40,000. So the total fixed cost is 70,000.
So paper is paper is 20. Something was 14.
Ink is 10. Well, wait, what did you say was 14?
I couldn't go up. I was trying to follow
Oh,
and
yeah,
drive.
he
I think
changed that.
was it the ink?
He changed that 7. That 7 he changed that you got 14 from. He changed that back to I think he changed that to 10. Oh,
Hello, Professor. Can you hear me?
If someone just logged on, he's not here right now.
yeah, he's not on.
We're doing a joint quiz.
Okay.
For ink, did y'all get 10? I know he didn't scroll back up. I tried to put it in my notes when he was doing it.
Okay.
Hold on. I'm trying to get. Okay, so we have administrative is 40,000, depreciation 40,000, the initial balance 200,000, minimum required balance. So that's what our ending balance needs to be. 100,000. Equipment 1 million. So right now we're looking at like
Are we just
1,080,000 for.
wait? Do we need to do all of that? Or are we just doing the manufacturing overhead, administrative expense, and interest expense? Right? Are we just redoing what he just taught us?
I'm
'Cause if we
confused.
are, because if we are, we just need the 3 numbers, which is 20,000, 40,000, and 10,000. So that total fixed cost is 70,000. For the total variable cost, I got 232, but I don't know because I need him to scroll up because I don't remember if the numbers I got were right or not.
So raw material is $10 per unit. And you need 1. And then the paper is 20 because it's 10 per unit, but two reams per book. Is that
So
what you needed?
yeah, labor is 2, right? Because
Yeah.
20, and then the bad
Then
debt is the 10%. Wait, was it 20%? I forgot. Wait, where is it?
bad debt's 20%.
I got 80 for that. That's 20% of 400. Right? Did y'all get that?
No, I got confused.
Hold on. I'm almost at my house. I can kind of figure it out.
I
think I'm mixing some stuff up. Let me.
All right. SP is 100. 20% from 100 is 80, right?
Yeah.
Okay, so so
For the selling expense, I got 120. I think it's 30%, right? Or does that change?
Which one you just said, Kyle?
For the selling, yeah, for the selling expense, isn't that 30%? Or did he change?
20
Yeah, right
to
there. Like 10% now. Okay, because I got an even number. What was even?
So I have a question. What is this variable manufacturing overhead?
For
Like,
what?
where is? Oh, hold on.
Ooh. Okay.
Yeah. Do you guys know the difference between the variable manufacturing overhead and the fixed? Like, where would you find the variable?
Oh, wait. What are you looking at?
I'm looking at my
we're assuming manufacturing overhead is all fixed for simplicity.
Okay,
And
so we're not dealing with variable at all for that one. I think I'm getting confused with,
trying to keep it simple.
okay. Okay, then, so we have 32 so far for the variable cost.
Oh.
Mhm.
Um,
Bad debt is 20, not 80.
wait, how'd you get that again?
100 times point 0.2.
Okay. Oh, see, that's where I went wrong. See, I didn't. Oh, that makes a lot more sense. Mm.
Professor, can you scroll down for me? Did y'all get 62 for the total variable?
I got 32.
Yeah, I got 32 too. Cause we changed was the bad debt 20? Did you say it was 20 or 30? Because I had it at,
I
or was it I forgot what I changed.
I got bad debt at 20.
Okay.
I got ink at 10, paper at 2, direct labor at 2. I mean, ink at 10, paper at 20, direct labor at 2, bad debt at 20, selling expenses 10.
Yeah. That's 32. Total variable cost is 32.
32?
No, I didn't include bad debts in mine. That's why I only got
Wait.
32.
Ink is
Oh,
$10.
You're right.
Paper
You're
is
right. You're right.
Yeah, I got ink 10, paper 20, labor 2. That's why I got 32. I didn't include bad debt.
okay.
And then that would be and then the contribution margin is 100 minus 62, right?
Correct.
Okay. 38. 38.
38.
And then you
Yeah.
drop 1,000 for the total of all of them, of the fixed costs.
And then I got overheads 20,000, admins 40,000, interest. What was interest?
I got 10,000.
10,000. 555, right? 555. Oh, 250. Yeah. 20, yeah. So interest 10.
You guys didn't include depreciation in yours?
No, we don't need that.
I think that's a fix.
That's not what you guys are doing right now, fixed costs?
Well, I don't think
Manufacturing?
it applies.
Yeah, it doesn't apply. Like you see to the right where it has all of them listed, that's all we need.
So 70,000 total fix.
Yeah. Divided by 38, right? Is it 38? Yeah.
1842
Yeah, that's right.
is quantity.
Explain to me how you got it.
Everybody know how we got that?
Who's explaining?
I was making. That's what I got too.
Taylor, did you get it?
Yeah, I got 1842.
I see how you guys got that, but I'm confused why you left out certain stuff. Oh, I see what you're talking about over here.
Yeah, like you see what's all listed.
Yeah, I didn't see that before.
We already got our template to calculate it. And we said, what, fixed costs, we aren't worried about depreciation yet, that'll come in, but right now we're just concerned with getting this quantity to break even. Rodney likes to break even.
It's better than losing.
Explain how you got what you got.
Starting from the top, selling price was 100.
Selling price is 100.
So we went down to, well, if we're gonna go from the left, the bad debt expense was 20%. So 20% from 100 was 20. And where we at? Raw materials for ink was 1 for 10, so that was 10. The cost was 10. The paper was 2 reams of paper for $10, so that was 20. The direct labor was, what was that? Was it 10 per book for $20 an hour? I think something like that. So we divide, right? So we'll divide the 10 from 20, and you get 2. So yeah, and then so I said bad debt. So we went from to the selling expense, which was 10% out of 100, which equals 10, and that gave us a total variable cost of 62. From there we go to our manufacturing overhead, which was 20,000.
Contribution margin.
Oh, what did I do? 38. 38 was the contribution margin.
Now you get 38.
We took the selling price 100 minus the total variable of 62 and got 38. Okay, manufacturing overhead was 20,000. Administration expense was 40,000. And then interest expense was 10,000, equaling 70,000 in total fixed costs. And we take the fixed cost divided by the CM, which was 70,000 divided by 38, and we came with a quantity of 1,842.
Any questions? Can everybody do this now? Is there anybody in here who can't do it? So everybody be able to do this on.
This was step 3 of our project, right? Well, basically.
That's basically step 2, isn't it? Determine your quantities.
Okay.
Okay, so kindly, since you're ready for step 3,
Yes.
ready to go to step 3, what we're gonna do?
I didn't necessarily say I was ready. I just assumed based off what I saw. But hold on, let me go look.
So if we were going to step 3, we would be ready to do what?
Is that the master budgeting?
Yeah, and we'll be ready to do the sales schedule. So that's where we would be on step 3. So if we were ready to come to the sales budget, I guess we'll get that on the side. What's the first thing you put on that sales budget? And we'll go back.
Was it the percentages?
All right, well, let's put the percentages on. What are the percentages?
I don't know if you're trying to if you was meant to share your screen, but we don't see it.
Y'all don't see it? Oh,
Uh-uh.
thank you for reminding me. So as soon as we finish calculating our quantity, and we'll just go back down 2,000 since it's even. The first thing we're going to do is what? We're going to take 2,000
Mm-hmm.
and put that here. So we aren't worried about year 2. So yeah, that's just for something else. Let me see. I got 200,000. So the first thing that you do when you calculate what the break-even amount is, you're gonna bring us 2,000. Then let's bring those percentages in. See if I can get 2,000 in here. Boy, it's going all the way over. Okay, that gets it close. So 2,000, what we just calculated, we bring that up. That's how we start. And this is, of course, the sales budget. Are there any question on the first thing that we do once we calculate the amount of the sales? Then it's right and it said we'll put those percentages in. And what were those percentages? Sales by quarter. What were those percentages from our assumptions? What? 10, 20, 30, and 40? So in the assumption, we said we were doing 10% first quarter. So 20% the second quarter.
Yes, 30 and then 40.
And that's always got to equal 100%. So we calculate a break-even amount and we bring it in here for the sales quantity. And then we put those percentages in. So what's the third thing we're gonna do? So the first thing, the 2,000, the second thing, the percentages. What's the third thing we're gonna do?
But the selling price,
Well, we could do that. What's our selling price of sales?
was it 400? Oh, this the old one or which one?
Which one you want it to be?
I think we did. I think it was 400.
Yeah, it was like 405. Was it 500?
Well, it was 500, yeah. So we could put those selling prices in. But then we got to go up a line and determine what? How many were sold each quarter?
Right.
So if we had 2,000, how many were sold the first quarter?
200.
I get 200.
I'm sorry. No. Wait, yeah. 200. Yeah, 200.
How you get it?
Just multiple.
2,000 multiplied by 10%.
Okay. So how many the second quarter?
300. Was it 400? Let me do the math. Stop playing.
I have 400.
400.
Oh, it's 4.
How many the third quarter?
600.
600 and 800.
So all we've done there is say the sales gonna be 2,000 for the year. We break them down by the quarter. So what were our total sales in the first quarter? In terms of dollars. 200 times 500.
100,000.
I'll take your word for it. So let's just stay on the first quarter. So all we're gonna do is stay on this first quarter. And in that original problem, the credit sales were 10%, right?
Mm-hmm.
And wait a minute, excuse me. The credit sales were 100%. But the bad debts were 10%, I believe, in the original problem, correct? And the collections in the month of sale were, what do we have those collections at? Guess we have to go back to those assumptions. Assumptions. Oh, I need my Word document. Okay, so we go back to our problem. And it said, you know, we're getting 10, 20, 30, and 40 selling price. And so it was 10% bad debts, 40% the month of sale, 50% the month after sale. So we go where we were working. Okay, so you all's job is to go down and finish the first quarter and tell me how much was collected. So all you're doing is concentrating on this first quarter. Go down this first quarter and tell me what was collected the first quarter. Begin work. So you all can up y'all points to 12, from 10 to 12, if you all can get down this first quarter. Get 2 more points today.
Is the total collected after the month, or we're? I guess I'm stuck on the total. I got a number. It's just I know we roll over as we keep going.
This is the first quarter. So the credit sales were what, 100,000, right? I'll do this for you. The bad debts were what?
10,000.
10% of 10,000. The collections were what?
40,000.
40,000. We didn't have a prior month, so this number is 0.
Yeah. Okay.
So the collections would be 40,000. All right, I'm gonna give y'all a chance to reprieve. Go to quarter 2. Y'all can pretend that I'm not here. Talk to each other and see if y'all can get this.
Did y'all get 80,000?
I'm
So,
I'm confused on where to get the collections first month after sale. What number is that coming from? The total sales? The
Yeah.
50% of the total sales?
yes,
Like
See,
the
that's where I messed up at. Hold on, because you're right.
I'm still working on it.
okay. And if it's 50% of the total sales,
So that's
and
that's 100,000. Wait, so when we have a
So,
collections first, do we add the
so that 50,000 from the month one or the quarter one should apply to the second.
wait, what happened? What 50?
So you know how we had on quarter one we had 100,000, but 50% of sale quarter one month after sale
Yeah, but you
Yeah,
said
that's
zero. So that's why I put 0 for the next quarter, but I didn't know.
that 50% of the 40?
of the 100,000. Because well, this is how I think. I think moving to the next one, like we only collected 40,000, but we had 100,000 credit sales for year one, so to speak. We still need to collect 50,000 basically.
I think the word month is throwing me off because I thought we were doing this in quarters.
Right. I'm sorry. So quarter one.
No, you're not how you're explaining it. I mean like the collections month of sale, and then it says collections first month after sale. That's why I'm like, is this?
Oh, I see what you're saying.
Do we need to be dividing this number by?
We shouldn't be divided at all.
Wait, what are you saying, Rodney, with the
I
50%?
think
I mean,
the
not the 50%.
50% collections after the sale should apply in quarter two.
Mm-hmm.
So the 80% of quarter two. I'm sorry, the 80,000 that we get in quarter two.
Oh.
Thank you, by the way.
Oh,
So the 80% that we get from 40% of the quarter,
right.
that should go into that first spot. And then the 50% of quarter one should go into the second spot on quarter
So
two.
you're saying 50% of that 100, so the 50,000. That's where you
Right.
got that?
Exactly.
Okay.
So it'll be
Because
80.
it's going off the previous one. I see.
Correct.
Wait, where are you getting 80 from?
So you got 130.
Exactly. 80 is from the 200,000.
40% of the 200,000.
Oh, okay. Yeah, I already did that. Okay. And then you would add that 50,000?
You add the 50,000 to the 80,000 and you get 130.
Oh, okay.
Collected in quarter two.
Okay.
What
So
were
I
the
would
sales
put the
in quarter
130. Oh.
What were the sales in quarter two?
200,000.
So, and the credit sales of what, 200,000 also.
Mm-hmm.
So what are the bad debts?
20,000.
How much are we collecting?
80,000.
80. And how much are we collecting in the prior quarter?
50,000.
Because we're collecting based on this 100 that was in that prior quarter. So our total collections are what?
130.
130.
Stay where you are, go now and finish out the table.
Okay.
First for quarters 3 and 4.
I got 310 for quarter 4, but I'll wait till y'all finish too.
Are we doing quarter 3 or quarter 4?
We're doing both.
Okay, wait, I have a question. So how we did the first collection, I mean the collections for the first quarter, we use that, what number do we use like each time?
The to get the total sales.
Wait, hold on. Like, okay, so like how we got the 80,000, we used that 50,000 from the last month in the second quarter. Do we use that?
So,
What did we
so
do for the
when you move to each quarter, you still have the remaining 50% that we didn't calculate.
Oh, so we apply the 50,000. Oh wait, hold on.
But you apply the 50% of the last quarter sale.
Oh, okay. Makes sense.
Ronnie, did you say you got 220 for quarter 3?
I did
Okay, and then quarter 4, 310.
310. Yeah.
Cool.
So I put these red lines in here to show you that. You go back up to the total sales in quarter 2, and you get 50% from that prior quarter, quarter 1. So in quarter 2, the sales in quarter 1, but you're collecting, and you continue to do that. So when you get to quarter 3, the total sales were how much in quarter 3?
300,000. You Professor, you're writing down at the collections.
Okay. So the totals, how do we get 300,000?
600 times 500.
All of these are credit sales. So in the current month, how much of the 300 did we get?
120,000.
And then we would have what? Reached back to quarter two and get 50% of that because that's being collected in quarter three. So we got how much?
100,000.
So what are our total collections in quarter two?
220,000.
Then what happens in quarter four?
Total sales was 400,000. Credit sales was 400,000. Bad debt was 40,000. 40% of the quarter was 160,000. And the previous quarter was 150,000.
So what are our total collections?
310,000.
Any questions? Any questions? So what were our total sales if we do all 4 quarters? We multiply by 500 or add across. What's our total sales going to be?
$1 million.
And the credit sales are going to be $1 million also, correct? Our bad debts,
100,000.
and our collections, we'll just look at the total collections. What's that going to be? That's 700,000.
700,000.
So what do you notice then? Sales were $1 million, but how much did you collect?
700,000.
So you can see the problem. You still got to pay expenses. So you got the sales, but it's only 700,000. Let's look at the journal entries. The initial investment, 200,000. And that was an assumption. We put in 200,000 and we debit cash and credit common stock. Then we record the $1 million in credit sales, debit account receivable, credit sales. Then we put in the bad debt expense, 100,000, debit bad debt, credit the allowance. Then we pick up these collections, 700. We debit cash and credit account receivable, 700,000. And then our cost of goods sold is always the quantity sold, which is 2,000, times the cost of raw materials and labor. And that turned out to be $100 in this problem. If you remember from before, the paper was 50, the ink was 50, the paper was 49, and the labor was $1, so that's how we got 100. So whatever those costs are, what you're calculating now, once you sell it, you got to multiply the product cost, materials and labor, times the quantity sold to get your cost of goods sold and finished good. So you make these journal entries. And the other thing you do is you take these collections and you're going to put them on the cash budget. See if I can get over to the cash budget. The cash budget is where we determine whether or not we need to borrow money or not. Then that initial journal entry, we put in that 200,000 because that represents what we started the company with. So our beginning balance was 200,000. Our collections in the first quarter was 40, and so we have 240,000 available. So we'll be able to do that on Tuesday. Will we be able to take a
To do
simple set?
the first portion we just did,
Yes.
including the journal entries?
Yeah.
I believe so. I do have a question on the journal entries. The cost of goods sold, you said is the product cost times material sold, or the
Let's see. If you remember all these numbers, these were the product costs: paper, labor, ink, paper, and labor. So those costs are combined, and so the product cost is $100. Put that in red. So you simply add up your ink, your paper, and your labor. You know, the cost you use to get your selling price. You add those up. And that's the cost of when you sell something, whatever you sell something, you've got to take the cost out of cost of goods sold. That was the cost. So you sold it for $1 million, but that 2,000 cost you in terms of product cost 200,000. So just keep in mind this is that. That's the product cost, which is raw materials and labor. I'll make these red too. So your product costs are always raw material. These are your product costs. So that's what you're pulling out. Any other questions?
Wait, okay, so the product cost and what is the cost of goods?
The product cost is always raw materials and labor.
Right.
So here it was ink, paper, and labor. We
Mhm.
add them together. Wait a minute, I put 100,000. That should be $100. That's $100. So when we get ready to make those journal entries, just like we multiplied here, 1,000 times what? What do we multiply 2,000 times?
500? I think.
500.
500 selling price. To get your cost of goods sold, you're gonna multiply 2,000 times those product costs.
Oh, it's just the product cost. Okay.
Was the cash and common stock given?
Yep.
Okay. I was just wondering where the 200,000 came from. I see everything else.
That would have been an assumption. Initial cash invested by owners 200,000.
Okay.
To own your project, you're gonna be doing the same thing. Everybody will initially invest 200 and maintain a minimum of 100,000. So the question still remains, do we need to borrow money? And how are we going to determine that? we got to go through and see what we pay in each of these cases. So we're just going to do the first quarter on each one next time to see if we need to borrow money. We got 240 available. How much did we pay for raw materials, ink, paper, labor, manufacturer overhead, selling administrative expense? We're going to determine what those payments were and see if we need to borrow money. We got 240 available. Do we need to borrow money? That's what you're determining for a manufacturing company. So for next time, we'll do a quiz right at the beginning where we cover the same thing. We'll give you some facts, and then you have to come through and come up with your break-even quantity, and then do the sales budget. Then
including the journal, including
Yeah.
the journal.
including the journal entries.
Get prepared for the quiz.
Right.
Okay.
Okay, let's see, let's go back. These don't change. These are the journal entries. I'll make them even larger. Those are the journal entries. They won't change. You just got to put your facts in. Got it? They don't change.
I got you.
So with your data, you just put it in. So if you're taking a quiz, you know, well, I have these already set up. So if you're taking the quiz, you just get your worksheet, get your blank worksheet. And if these are not on it, put these on it. And then know you fill in the dollar amounts. And those dollar amounts are coming from where? The total columns in the sales journal. So you say, well, there's a journal entry by credit sales. Say I got this JE here, credit sales. Then there's a JE by bad debts. Then there's a JE by collections and a CB, which means it goes to the cash budget. So you put these JEs in so you know that that's going to happen. Then that's 3 of the journal entries. Your initial investment comes here. And then you have to calculate your cost of goods sold. That's simply going to be the quantity sold times what? These costs here, the product cost. So we'll work on to see where we are next time. Are there any further questions by anyone?
How often will you have this? Not how often. How soon will you have this recording uploaded to YouTube?
You gonna listen to it?
Yeah, so I can go back and have an example for my project.
Oh, got an example for your project. So also you'll be turning in Tuesday night the sales budget for your project. So the quiz is good. That gives you, that puts more points into play. And then you will, so you do the quiz, then your sales budget will be due, that night at midnight. So we do a quiz beforehand. That's practice. Then it didn't take us that long to do this, did it? So you should have ample time by midnight to get your sales budget in for your project done. And then at 5 o'clock on Tuesday, we'll look at your numbers to make sure you're on the right track with those to get that done. Any further questions? So see, Star here, you got 12 points today. With your major effort. Renault, so you got 12 points. What about that?
Thank you so much. I needed the points.
Well, where's the rest of your team?
I have no idea, to be honest, but I'll let them know what happened.
Let them know they missed 12 points. And 10 points on the docket in class on Tuesday. And your sales budget, that might be 20 points for your project. So you all got a lot of points on the line on next Tuesday. Okay, so we're pushing through, the time that we lost, the hurricane day. It's kind of hurting us a bit now. And we had to spend some extra time on determining unit cost, but you can see we're still doing the same thing. Materials, labor, and overhead. It's the same thing, always on a unit basis. Well, you all have a good holiday period and don't eat too much.
I'm picking out. I can't. Oh yeah, I can't wait.
But since the Kyler can afford, Rodney can afford to do that. Rodney can afford to do that, but I don't know about everybody else.
Yeah, this is that time of the month, put on extra calories. Go take a couple naps, wake up, eat again,
See, Rodney will probably be weighing less when he come back on Thursday, on Tuesday, but that's not true for everybody now. So everybody can't follow Rodney's example.
I hope you have a good one too, Professor Boyd. I appreciate it.
We'll try to stay safe. You all stay safe, and we'll see you all on next Tuesday.
All right. See you next Tuesday.
All right, bye.
Good night.
Thank you, Professor. You have a good one.
All right, y'all.